All right. Good morning, everybody. This is Nate. I am the lead technical tactician for Monument Traders Alliance and Trade of the Day. And in today's video, just want to kind of go over the S&P 500, and then we'll take a look for a fresh setup. I think last time we talked about HIMS, and it's still my favorite chart. It's still setting up beautifully. So if you are curious about this setup, go check out last week's video. But for this week, we have a situation where, we've got some war headlines, had us down a little bit on Friday last week. Yesterday, we're kind of right back up, and we just sort of continue to slowly chop around here right underneath the all-time high in the SPY. With the Qs, it's sort of the same thing. The Qs are actually a little bit closer, but, more or less, we're just sort of consolidating, chopping around here right underneath the all-time high. I think we are going to go get those new highs. We'll see, but that's kind of what I'm looking for. Is just, light strength. Now, the headlines can change that in a hurry, but I do think unless something major changes with the tariff situation, if we have a major re-escalation with China, or if something completely, if the Fed comes out and says we're never going to lower interest rates again, or something completely out of left field, then maybe that situation changes. But for now, I think it's buy the dip, buy the dip, buy the dip. So with that said, I'm positioned to the long side, and that's pretty much all I really want to do is buy the dip and find good setups to the long side. So with that in mind, I'm going to pull up S.A.M here. And if you don't know what S.A.M is, this is our AI scanning tool. Let me pop this over to yesterday so I can see the data as of yesterday's close. I want to go over to my watch list, and then I'm going to sort this by S up, which basically just brings sort of the cream of the crop up to the top. And I just want to show you that HIMS is still here, number one on my list. Okay. So again, I would probably recommend HIMS again, but I did it last week, so I'm not going to do that. Just wanted to show you that one. The one that I like this week, and this is a this is a volatile trade, and I'll be the first to acknowledge and admit that. But the ticker symbol is CRWV. This is CoreWeave, and this is the IPO, right? So it's not a very old stock. It IPO'd back in late March, and it's just been on an absolute tear, right? Well, this move is now following. I'm sorry, this consolidation following this big move is extremely attractive to me. And if I zoom in on like the 78-minute, you can see kind of exactly what I'm talking about here. This chart looks absolutely phenomenal. I think there's a 2-hour squeeze as well. Yep. I don't know if there's 130. No. And is there 195? So there's a 195-minute squeeze starting up. But the chart that I really like here is a 78-minute squeeze. And if the people right in through here around 150 can continue to sort of support this, if CRWV can stay above this 150 level, I think this is actually going to go break over the all-time high, which is right here, and extend up to about 200, which is, a pretty big move. Now, what I like about this is the risk reward, right? If we get a close sort of underneath, call it, 150 would be an aggressive stop. 143, 144 would be a little bit, less aggressive. But really, I think at this point, you can use 150 as a closing basis, as a stop, sort of an over-under, right? So if we're above that, you want to be long. If you're below that, you don't necessarily want to be short, but you don't really want to be long either. But what we can do is, and again, these options are pretty expensive. But what I want to do is show you a way to sort of take advantage of this. So I've got some smaller positions or whatever, but what I've done is I've actually gone all the way out into July because I'm going on vacation and I don't want to necessarily have to play with the timing aspect of this, but you don't need to go 31 days out. What I would suggest for this one is to go 2 weeks out. And I like, doing something out of the money in this case, but you don't necessarily have to. It just depends on how big, sort of your account is and how much size you want. But I like the $160 calls going out 2 weeks. So sort of right, slightly out of the money. You can do the 155s too. I like the spread on the 160s better. There's a little bit more open interest. But I like the 160s for, what is that expiration? 7/3. And again, the idea would be to enter somewhere around, between 150 and 155, right? With a stop under, you could say 145, right? And a target of 200. So you can see the risk reward is phenomenal. And that's kind of what I'm looking at. So I'll get this typed up and sent out. And that's what I got for this week. I hope it helps, and I will talk to you guys soon. Later.